Now's the part of the show when I talk about what I believe is important for individual investors to consider before you make your investment decisions over the next couple of weeks. And as I said off the top of the show, here we have 3 topics that I think are important for markets. Federal Reserve head Jerome Powell will be giving his annual speech at Jackson Hole, Wyoming. It is something that a bit of a tradition, I guess. All of the central bankers around the world gather at Jackson Hole, which is in Wyoming, to hear about what's happening with respect to interest rates, inflation, and to hear from all the different central bankers and hear what everybody has to say. Obviously, the headline speaker will be Jerome Powell, head of the Federal Reserve, and he will give his speech on Friday. The second topic that I think is important for individual investors to consider are Nvidia earnings. Now, normally I don't put a whole lot of stake in just one company's earnings, but because Nvidia has been so crucial and so important to this market, the leader of artificial intelligence, the leader of the tech stocks, the big cap tech stocks, Nvidia has now become, I think, the 5th largest company in the world right now, over $1 trillion market cap. And really, the market didn't take off until Nvidia reported earnings last time and spoke about artificial intelligence. So I think when Nvidia reports earnings tonight after the close, I think their earnings will be crucial in how the market behaves. We'll talk a bit more about that. And lastly, investing ideas that have pulled back. I think there have been a number of companies that you could take a look at today, which may have gotten a little ahead of themselves, perhaps a month or 2 ago, that have now pulled back, that maybe you can go back to them and maybe add some more money to. So let's talk about the first idea that we have that individual investors should consider or focus on. And that's the speech by the head of the Federal Reserve, Jerome Powell. He'll speak on Friday, I believe, I think late morning or afternoon. And I expect him to continue to be what we would say is hawkish. I expect him to say that inflation is still not where they want it to be, 2%, that headline inflation or core inflation is still stubbornly high. Headline inflation has come down, but has recently ticked up a little bit from 3% to 3.2% in the US. And so I think Jerome Powell will say that they're going to continue to be data dependent and may have to raise interest rates yet again. And we'll see how the market takes that, because I think that is the expectation from all of us. So if we get what we expect, I think you could see this market rally. However, if Jerome Powell says something along the lines of what he said last year when he gave his speech at Jackson Hole, which was an 8-minute speech, and said basically they need to do whatever it takes to attack inflation, to bring it down, market didn't like that. And we saw the market sell off at the end of August and into September. And then the markets didn't bounce back until sometime around third week, I think, of October of 2022. We have a chart here where I think it's a fantastic chart showing us when the Fed hikes key interest rates, what happens to the stock market. Don't believe we've seen this chart before. I think it's a new chart that we managed to find. And I think it's pretty telling. When you look at the far left-hand side and you look at when interest rates spiked here above 6%, what happened shortly thereafter is we had a recession. And then, of course, the Federal Reserve cut interest rates all the way down. And then interest rates picked back up in 2005. And then what did we have? Well, we had another recession and interest rates came right back down. And then interest rates remained pretty low for the foreseeable future. It started to come back up again. And then we had coronavirus or the pandemic hit us. And then what happened? We dropped interest rates again. So that was a little bit different because we didn't see a recession this time when we raised interest rates. Well, here we are again on the far right-hand side of this chart, this graph. We have interest rates now, or the Fed funds rate at 5.5%. I think a lot of investors are wondering, will we see now another recession? Will we see interest rates go higher than or approach 6% or go higher than 6%? And will that cause, I guess, the latest recessionary times? So that's really, I guess, the gist of why this market is so jittery and why when the Federal Reserve head, Jerome Powell, gives a speech like the one he's going to give in Jackson Hole, why everyone's going to be on edge. We're going to parse through everything that he says, cut it all up and analyze it so many different ways to see what is his thinking. Is his thinking they're going to raise rates again in the fall, maybe one more time and then done? Is he going to raise at all? Or perhaps he's on hold to see what happens heading into 2024. We have one more chart here on U.S. Consumer Price Index, which is your measure of inflation. And you can see how inflation continues to come down, although, as I mentioned, there's a little bit of a pickup on the far right. Inflation went from 3% in the U.S. to 3.2%. Core inflation, which when you take out food and energy, that's come down below 5% to 4.7%. And if you were to take a similar chart here in Canada, you would see that our inflation rate also went from 2.8 to actually 3.3, so slightly above the U.S. rate. So even the inflation rate in our country has, I guess, poked a little bit higher. And what is our central bank going to do? Will the Bank of Canada considering raising interest rates in the fall? I don't believe central banks in Canada or the U.S. will raise in September, but what will they do in, come the fall, October, November? Will they raise rates again? So the speech at Jackson Hole, in my opinion, is something for individual investors to focus on. The second point that I wanted to touch on, as I mentioned earlier, are Nvidia earnings. And as I said, Nvidia has been the leader for this market. The market truly did not take off until Nvidia, in their last quarterly earnings, said they're doing phenomenal. They took up their expectations by quite a bit. Probably the best earnings report that I've seen out of any company, perhaps ever, or at least for quite some time. And so, yes, coming into Nvidia's earnings tonight, the bar has been set pretty high. Will they be able to beat a high bar, or will they just meet expectations? In my opinion, if they just meet expectations, they could see, or we could see, their stock price fall. And with it, many of the other tech names, some of the other chip makers, and some of the other tech names that are affiliated with, or when you see their name, you associate them with artificial intelligence. We have a chart on Nvidia, which we will show, of course, and you could see how well Nvidia has done. This is a pretty good chart, nice chart over the last 6 months or so, and you can see how Nvidia has performed. And again, I always say that you can't just rely on one investment idea to give you an indication how the rest of the market is going to perform. Obviously, there are many other sectors that you can invest your money in. But I think a lot is riding on this performance. And we know that the S&P 500 is made up of a lot of tech names, and roughly 30% of the S&P is technology stocks. And we know Nvidia has been the best performing tech stock and one of the biggest companies in the world today. So let's keep an eye on Nvidia earnings after the bell. Let's see what they have to say. Let's see what CEO will say with respect to being able to provide all the chips that are necessary to power all this artificial intelligence from all these companies. We know right now what's restricting or preventing Nvidia from earning even more has been the ability to produce. Obviously, they need to, try to keep up with the demand, and right now it's very difficult. And until other companies like AMD or perhaps other chip makers start to, produce or develop chips to power artificial intelligence and become more mainstream, like Nvidia pretty much is the only game in town. So let's hear what they have to say, and let's see how it moves markets come Thursday. The last area that I wanted to touch on that I think individual investors should focus on before you make your investment decisions is this idea of buying investments that have pulled back recently. Some of the names that I've liked that we've talked about on this show, like Bank of America, for example. We have a chart on Bank of America. It was well above $30 a share recently and has recently pulled back into that $28 range. And I know we have US Bancorp there, but we can show Bank of America. I believe we have a chart on Bank of America. There it is. And you can see here it was $29, but I can tell you now it is below $29, trading at only 8 times earnings. So single-digit PE multiple for the second largest bank in the United States. I think a fantastic bank to own and something that you could see has pulled back. Another name that has pulled back by quite a bit is Meta Platforms, formerly Facebook. And again, a name that once upon a time, not too long ago, maybe just a few weeks ago, was trading at $325, $330 a share, now into the 280s. We've seen a 10 to 15% pullback on a bunch of names that I think are very good quality. Meta Platforms, or Meta, formerly Facebook, is one of those names. And last but not least, Microsoft. Microsoft, second largest company in the world, $2.5 trillion market cap, or maybe a little less now that the stock has pulled back. You can see here, $320 a share. Once upon a time, maybe 3 weeks ago, not that long ago, $360, $365 a share. So another name, another great quality name that I think individual investors perhaps can get excited about if you were to continue to see some of these names pull back in price. And again, nothing has changed with these companies. What I think is happening is market is getting just a little bit concerned because of higher yields, perhaps some seasonal factors starting to play in for the months of August and September. And I think those are the main reasons why we're seeing a number of these companies pull back, basically drop a little bit in value. And these names are such good quality that I would look at these as buying opportunities. So before you make your, investment decisions over the next couple of weeks, try to find some of these names that have perhaps dropped a little bit in share price due to factors that have nothing to do with the company's fundamentals, but still have a great outlook going forward, and names that you could be comfortable owning and comfortable sleeping at night, knowing that these are the best names, and the best names not only in their sector, but also the best names out there in the world today.